Welcome back to my channel. This is part 2 of my status of the crypto markets, and then I think it'll be the last video of this series because the goal of this series was to try to predict or to see where we are exactly. But then one of the things I'm realizing is you can't really do that. Like, it's impossible to predict what's going to happen in the future. But what you can do is find information that may lead you to think some things, And I'm just going to show you some of that information, and then I'm going to go into my thesis, and that's where we're going to end this series of thoughts for the status of the crypto markets. So in my last video, I went over these two things, the altcoin season, and this one's more important, I consider, the Newpol index. And that was, kind of towards the mathematics approach or, simple math stuff. But this, I'm going to focus on this one is I'm going to focus on adoption from the math section, which is, just simple numbers, and my personal game thesis. And then I'm not going to do as much of this, macro psychology, because that's too short-sighted for me. And this might be a short wave type interval type thing, but I don't think it has a lot of weight. So I'm going to go over that mostly. But there is the Newpol part, which is part of this macro psychology emotional component. But yes, for this second video, I'm just going to go over my game thesis and also just some of the adoption metrics. So I just went over my favorite coins. And so what we can tell is that things are very bullish, like as far as according to all this. Okay, so we're going to look at the wallets, we're going to look at transactions and Metcalfe's law in relationship to them, and why these things make it seem as if, things are very bullish going forward. So as far as, this is Bitcoin wallet, right? Bitcoin wallets. The number of Bitcoin wallets is on an exponential growth, and you could see that it's even getting faster, which means a speeding up rate of change, which is a good thing as far as adoption goes. And regarding the growth of transactions, that's actually slowing down, which is not a bad thing. So when rate of change, so if you have a slope and the slope gets higher and higher, that's a good thing. If you have a rate of change and the slope gets slower and slower, that's a bad thing. And as far as Bitcoin transactions go, it's going down. The rate of change is going down. It's still growing, but it is slowing down, and that is actually not a good sign. Now, one of the, for the Metcalfe's law component of this, which analyzes, these two things, right? So while it's growing is exponential because the rate of change is getting faster, right? So the rate of, even you can see here something happened here, which made it even go faster. So wallet growth is an exponential thing. That's a good thing for Bitcoin's growth. As far as the transactions go, it's linear, but it's likely exponential. And because I say that the possibility of Bitcoin's transactions slowing down is due to off-chain capture of Bitcoin. So a lot of Bitcoin's movement is moving into other blockchains or moving off the blockchain. So other blockchains are absorbing Bitcoin, and this is risky to me. And it's one of the main risks of Bitcoin's future because Bitcoin is supposed to pay for its miners using transaction fees. And we know that that's not going to be subsidized by inflation in the future. So that's a risk point. And I know people have made arguments that Bitcoin's future is fine, especially if the market cap keeps going up. But none of that's guaranteed. And so it is, risky, like at the very least, I don't consider this as Bitcoin as secure as some people do. Maybe I'm wrong, but as far as how I see things, it's supporting the network on transactions without, we don't know if that will work. So it's far from secure. It's far from safe as a safe haven asset. All right, as far as Ethereum goes, once again, you can see Ethereum had a very good high spike here, and it had a rate of change here, and this is roughly matching how things were going. And so, one thing I'm noticing with these altcoins is they have event transitions, whereas speeding up rate of change happens for wallet adoption. but it's still good. And it shows, something happened in 2018 that caused wallets to go exponential. And something happened around January or, sometime in the middle of last year to cause Ethereum to have like an increased rate of change. You can see the rate of change here, and it goes up for its wallet adoption. So that's good. It's an exponential growth. And as far as Ethereum transactions go, you can see it slowed down for quite a while, and it's picking up again. So once again, speeding up rate of change. And so for Metcalfe's law, both of these are exponential. This is Metcalfe's law right here. The utility of the network is based on the number of users squared, so we should see an exponential price movement. And we have that for Ethereum, and we may even have it for Bitcoin, but the transactions are moving off chain, so that's, but still, Bitcoin's wallet, that's a good thing. And so one of the things to note with all of these cryptos is they're all in an exponential growth phase. But I'm going to just go over each project. And as you can see, this is the active wallets for Polkadot. And you can see Polkadot's getting very aggressive. And one of the things I noticed with these, as far as compared to Bitcoin, is these have these event transitions where the rate picks up. So around January of this year, Polkadot started getting aggressive price movements, aggressive price movements and aggressive adoption. Which Metcalfe's law says the utility of the network is going to go up squared, right? So we are getting that exponential growth for wallets, and we are also seeing it happen for transactions. So speeding up rate of change. And this one's not really that live yet. A lot of it's in testing phase. This is mostly developers doing this activity. So that's exciting in of itself for the Polkadot ecosystem. So yeah, you can see all of these are exponentially growing, so I'm not going to review that again, but they all are. As far as Celsius goes, Celsius is one of the most aggressive growers because it's maintaining this exponential growth it looks like it's flatlining. This is an amazing amount of growth, 4% a week, percentage growth per week. If Celsius could maintain that, it's going to be a monster. And you can see it's got the exponential growth curve as well. But this one, the thing to notice about Celsius is that there's no event transitions. It has constant growth. This is a constant exponential function. Whereas these, something's happening which causes its growth rate to grow, and then something else happens and its growth, grows. So, you can see these events happen in these coins over here. Celsius doesn't have that. It's more of a smooth curve. And you even have this data to show the growth rate being smoothly at 4% compounding annual interest, or a 4% growth per week. That's very aggressive. So Celsius, I'm very bullish on as far as its growth. And then, these are just my favorite coins that I'm going over. I think these are the most solid projects. So if you want to know what my most solid picks are, it's Bitcoin, Ethereum, DOT, Celsius, and Luxo. This one also has a speeding rate of change, but it's also based on these event transitions into higher, you could see it was low, had a big spike of events, and it was at a higher amount, but this is zero growth right here. Going sideways like this for the wallets, this is the number of wallets, going sideways. So that's not good, but it's fine because this project is not even live yet, and you can see we're back on that exponential growth out of nowhere, which is, a lot of these projects have big events that cause people to get excited about them. And so that's fine until they become like Celsius, where they're just constantly growing. Okay, so that just goes to show the adoption part of this, of looking at if adoption is a metric based on Metcalfe's law, we should expect these projects, because they're growing exponentially, to have price performance in the future. So this adoption curve is showing us that we are not done with the bull market, at least from an adoption perspective, because a lot of these are even, you can see it's not showing any signs of slowing down. Maybe Bitcoin's transactions are, but Ethereum's picking up, Polkadot's picking up, Celsius is picking up. They're all following this exponential growth curve. The price will match that eventually. All right, and then finally for my game thesis, just an overview of why I'm bullish still, is because this is my game thesis, the way I'm thinking about the whole situation now. And this is my decade-long perspective. And what happened is, or like in reflect of current events, right? This is my decade-long look or my 5-year look in reflect of current events. So basically, when Elon Musk added Bitcoin to the balance sheet of Tesla Motors, right, and also the Michael Saylor thing, what it did is it made crypto more credible, and it also brought awareness. And these things together with shareholders means that major institutions. I'm actually going to block these out so I can keep track of what I go over. Major institutions are, have become. They see it as credible. They're, the shareholders and awareness from this event, right? This major event started a domino effect, right? And now the credibility, the shareholders and awareness are coming together to make institutions make strategic adjustments based on this information, like because they have awareness now. There are, these are the people who make decisions inside of our institutions. We have a system of people who are shareholders of businesses, and they make decisions, right? And what they are doing now is they're going to start thinking about how their business can utilize crypto services, right? How their businesses can utilize this new industry to get a strategic advantage, right? As well as they're going to add crypto to their balance sheets, okay? So they're going to utilize crypto businesses, and they're going to add crypto to their balance sheets, right? And what it's going to do when they use crypto services is it's going to pull human talent and skills, because you're paying for services. It's going to pull human talent and skills into the crypto space and into these businesses, and pull more people and capital into crypto. As well as adding crypto to the balance sheet, it's basically them investing in crypto companies, which will also pull human talent and skills into crypto. And all this human capital coming in means that crypto services become more useful. Metcalfe's law, right? This is a free market, right? And this free market is pulling more people in, and Metcalfe's law is taking place. And so that this whole situation is going to cause a feedback loop back to crypto credibility, because you're having all of these people come into the crypto space, and make it more useful. The more people that are making it useful, the more validation it's going to get, the more credible it's going to be. It's a feedback loop. And, like at this point, I would say it's very hard to say crypto is not credible. And if you think it's not, like there's very few people that see things that way anymore. So, this will probably disappear eventually as an element, and it'll just be about awareness continually pushing. But not everybody still thinks crypto is credible, so I guess it's still that feedback loop, right? And also this pool of crypto services, so all those people coming in and making more services, that's also a feedback loop in of itself of making the services themselves more useful, right? The services themselves become more useful. And the services themselves becoming more useful mean more people are going to come into crypto, because the services are becoming more attractive, so there's going to be more business models. So you can see how it's like this feedback loop, right? And then looking at another direction so companies, now going back into the other component of these interconnected relationships. So businesses add crypto to their balance sheet, and that causes crypto exposure, okay? So people having crypto on their balance sheet. So America's made up of a bunch of people investing in companies. And so now that crypto is being added to balance sheet, it's getting people exposure to crypto. And that exposure means the general public's going to have exposure. That means that politicians are going to have exposure. And it means the stock market is going to have exposure to crypto. Okay, all of these events started propagating from this zeitgeist moment, right? And the general public having exposure reflects on politicians, because, politicians, they only care about one thing: getting voted in. And so the general public's going to have crypto. The stock market is going to have crypto on their balance sheet. And even the politicians are going to have their own portfolios owning crypto. Even the moment Tesla did that, there's many politicians who own Tesla. And those politicians know that. And now there's a bunch of businesses adding, like Visa and whatever. They're all adding crypto to their balance sheets, okay? And what does that mean? So the politicians are going to represent their own interests. They're going to make favorable crypto laws. And these favorable crypto laws are going to influence crypto services to be more useful, because now there's less risk. People will feel more freely to bring those services to market, and it'll entering a cycle of making crypto more credible and going back down the whole path, right? So all of these things are a strong feedback loop. And that's what we're in right now, is a very strong feedback loop. And finally, favorable crypto laws is a feedback loop to making crypto more credible. So this is pretty much the way I see it, the macro picture of crypto. And basically a summary, cryptocurrency has entered a complete capture event phase. The motion set forth by Elon Musk and Michael Saylor has sparked a cascade of events of a complete social, economic, and political capture of cryptocurrency. And that's what I believe this domino effect is happening right here. I believe we're entering all these different facets of society, and they're entering in feedback loops that are going to cause the exponential adoption of crypto and over time. And it's going to take time for those businesses to adjust, but it's going to happen, and it's going to be quite aggressive. And finally, the last thing I wanted to go over for where are we in terms of the future is to determine what is the addressable crypto market, the addressable market size of crypto, right? Because we want to know, we can look at the market caps of current crypto projects and say, where are they in relationship to where the whole thing's going to be in the future? Excluding Bitcoin and Ethereum, we're only at 430 billion. However, the addressable market of cryptocurrency is all money and all value services, because money is half of every transaction, or value transfer is the half of every transaction. Crypto is disrupting that. And so it's going to disrupt all money and all value services, right? And to take a look, so all the alts right now are worth 430 billion. And we could look at some of these other projects. So gold itself is an $11 trillion entity. Apple itself is a $2 trillion entity. So all the cryptocurrency, the thing that's going to disrupt all money and all finance, is much smaller than a single company. And it's smaller than gold, but I think it's going to be much bigger than gold. The altcoins are going to be much bigger than gold. And these are just, individual companies. These kind of companies are like Google. Here's Bitcoin. Bitcoin is on this list. It's actually pretty large. I think Bitcoin will be the size of gold. It'll be one of the biggest assets. But I think the alts will be bigger than all of this. And one of the reasons why is all of these things are going to be crypto is the foundation level layer, and all these businesses are going to be built on top of crypto. All future business, all future finance is going to be built on crypto. This is the foundation of the future economy. And so this is going to be huge, because you're going to have all of these things built on top of crypto, right? So if you have all the world's assets on top of it, this thing's going to be pretty valuable, right? That's that's another one of my theses, okay? So as far as where are we going? So is this crypto bull market over? Regarding to answer the original question of this series, the status of the crypto markets, you decide. I can't decide that for you, but in my opinion, I think we're here, and I don't think we're gonna have a significant pullback until we at least go for another huge, massive run. But I don't know how that's gonna look. No one can. One thing I can say for certain is everybody thinks there is gonna be a huge pullback. Everybody's talking about getting out in the next run or whatever, getting out here or there. I don't think the future looks like the past in every instance. Sometimes it rhymes, sometimes it doesn't. But if everybody expects something to happen, it might not happen. So I don't know what's going to happen, but I can tell you this: crypto has an amazing future, and this is where it's going to be at. And so, given that we're entering exponential growth, and my thesis, I think that we're not even close to seeing where this thing can go. So I'm just going to hodl, unless we do get ridiculous price performances, which I think is deserving. So I'm going to see where things go. But that's my information. If you guys like this stuff, like and subscribe. And my next couple of videos, I'm going to try to get out some gems, and hopefully we can find some high quality products for the channel. All right, bye guys.